Let's look at inducement. So what is inducement? Inducement is a price movement, right, designed to attract traders into taking position before the market moves in the opposite direction, right? It usually encourages traders to buy or sell too early, creating liquidity that larger market participants can use to feed their own order. So in simple terms, inducement is the market way of tempting traders into wrong trade before making a real move. Personally, I call inducement the deceiver. Anytime I want to trade, I always look out for inducement. This is one of the things I look at for anytime I'm trading. Now, this is the rule I want you to bear in your mind. When a market is moving an uptrend like this, right, and break a structural low, can call this place change of character. So when there is a change of character, there will be a pullback that the market will continue. Now this pullback is what we call inducement, the deceiver. But pay attention, it is valid or only valid when it reverses to 50 level of the previous move or more. If it not reverse to 50 level of the previous move of the swing structure, it is not valid. So always wait for a reversal of 50% or more. I'm not saying that all the time it will happen like that, but that is what we call a valid inducement. Now, before I proceed, let me briefly explain this again. We all know that when the market is moving an uptrend, it's forming a higher high and higher low. And it was generally believed that when the market break a zone, it will reverse back to 50 level like this and continue to move. But most of the time, it does not really appear like this. What if the market come like this and it not reverse to 50 level, right? You can't call this a valid pullback. The market continue to move like this, right? Now, before your swing high will be here, while this place is your swing low. What will be constant is your swing low. What will be changing is your swing high. This one will now be presently your swing high. That means you will only be looking for 50% of this gap to this gap, no longer this gap to this gap. This thing is very, very necessary anytime you are trading. 50 level, then the price will come and form a retest at that region, then continue to move to an upward direction. But you know that anytime you want to trade, there are many things we are looking out for before we place our trade. I call them confirmations, right? You must put them out before you trade. Now, this is my strategy pattern, right? This is an example of a market that is moving an uptrend. Why you can see now that this is liquidity sweep. Now, A is liquidity sweep. Your B is inducement. I call it the deceiver. So there's a breakout, then I spot my deceiver. What am I waiting for? I'm waiting for this price to come here and drag and sweep this liquidity, because it's also liquidity, right? And sweep the liquidity before I place my entry forward for buy. It's not hard. The same thing is here. This is liquidity sweep. Liquidity sweep. Why there is a breakout, inducement, retrace to 50 level, right? Then I wait patiently for this to come to this region, right? Sweep that level, then I enter my trade. You will always see this. I don't think there's no week that you will not spot out this pattern in the chart. Or let me even say there's no day, either on 15 minutes or 4 hours or 30 minutes, you will surely spot it out. So let's proceed. There's still another pattern I want to show you, but pay attention to this. You can see that there's a breakout, but the next pattern is somehow different and unique. So before the breakout, B will be formed, right? What we are certain about is there's liquidity sweep, right? Liquidity sweep, and the price was about to break and retrace, then break the zone to form C. So this C is your present high. It must be responsible for the breaking of this B. Then you enter for buy. The same thing is applicable for this one. But what the difference between this and the previous one is that the B was formed after a breakout. But for this strategy pattern 2, the B is formed before a breakout. There are still many others, but let's stay with this for now. Now let's proceed. This is the practical example of the strategy. You can see that this is liquidity sweep. It's obvious. Then the B was formed before a breakout. Then after a breakout, we're expecting that this should be our C, but this position did not lead to the breaking of this B. But sometimes it will happen like that. Sometimes this will surely push to B and break B and continue to move in an upward direction. So now pay attention to this. This refused to function as C. That's why you can see that I pushed the C up here, because this one is the highest high that led to the breaking of B. Then I place my entry here and push up. Can you see? But also pay attention to something here. This is a liquidity sweep. It's very obvious, right? Then there's a breakout. There's a breakout here. Why this one will be our B? What happened? You can see the price came back and swept even the B and the A. Sometimes there's a high tendency that it can sweep the A and move to an upward direction. So assuming I want to enter trade here, I will have set my TP here, and my stop loss will be around somewhere here. But this is where I will have entered the trade. You can see that it's 1:3, and if you use a reasonable lot size, you will earn well. You will earn well. When it comes to forex trade, it's not about putting a lot of money to trade. It's about understanding how to trade. And when you understand how to trade, it will be easy for you to trade at any time. Even though there will be times that there will be losses, but the losses will be minimal. It will not be much compared to the profit that you are earning. So let's look at the next. This is liquidity sweep. It's very obvious, right? Then there's a breakout. This is pattern 1. B is formed. Then we are waiting for C, but this was unable to break this B. That is why my C shifts here. You can see that this C led to the breaking of this B, this deceiver, right, and push in. That is liquidity sweep. My entry will have been around here. Then my TP will be here, normal. So let me say this again. If you have this, right, B, this is your B. When it breaks, your first TP is supposed to be this region, while your second TP will be in this region. So let's proceed. Look at this again. You will always spot it out, but you have to be calm and be patient. Now look at this, liquidity sweep, then inducement, wait for C came, it touched it, but normally it's supposed to break, but not, it will not always happen like that, right? Then push down. You can see that I position my TP at this region, and also I want you to see a bigger view. If you look at this point to this point, you can see that this is A, right? This is A. Look at it. This is A, there's a breakdown, right? And this also. Why this will be our B. So, but the reason why this cannot work is because the overall trend is bearish, but this is applicable for a bullish trend. Is it clear? So let's see, maybe let's see another example. Look at this, liquidity sweep. No, for the person that was asking me about liquidity sweep, can you see it now? Liquidity sweep, there's a breakout, there's a retracement, there's B, then C came back and break that level, then entry will be here. Don't worry, we are still going to talk more about how to enter trade, but I just want you guys to really understand this strategy. It's not really hard. Spot out liquidity sweep, and after spotting out liquidity sweep, look for your inducement, right? Then wait for price to come and sweep that inducement before placing trade. But note, when you are placing trade, we confirm at lower time frame before we place trade. So let's move to the next one, and that will be imbalance.